The best predictor of success is the innate ability to allocate time properly. Keith Rabois. My friends, 10 to 15 minutes each and every day. You've got to find time to do that. You cannot do all this on the weekends. You can't reserve 1 or 2 nights a week. Every day, 10 to 15 minutes. Find that time period, just like hopefully you do, to spend quality time with the people you love. Time to work out, keep yourself in shape, eat the right kind of foods. You have to plan for these things. You plan your work and you work your plan. 10 to 15 minutes. You got to put that in each and every day the market is open. Let's jump into these charts. For those of you who stay with me, I'm going to cover some commodities at the end, tell you what we are seeing and what we're going to add to our charting crypto every week. I'm going to add commodities. I can tell you that right now. But let's jump into these charts. Everything down for the day except bonds. 1.68% we see on the S&P. The Nasdaq down 1.63%. Things continuing to trundle down after we successfully concluded with our 2-to-1 risk to reward ratio. Yes, you can bifurcate this and you can sell out half your position at the 2-to-1 and let the rest of it ride. But over and over again, don't get greedy. Be happy. 3.70% gain in just a few days is wonderful. Now, again, how do you make money when the S&P goes down? One of 2 things. Either you've taken our training that we provide to our Patreon members, 3-part series, Options Made Simple, the Charting Wealth Way, and you buy options in your practice trade on the S&P 500, or you do something like an inverse fund, a single inverse fund like SH. What is that? Well, that is the ProShare Short S&P 500. And what did it do when the S&P 500 itself was going down? It was going up. You can see the price is different, but it is set up and managed to match the movement of the S&P at a -1. So if the S&P is going down, it's the inverse. It's going to go up. If the S&P is going up, it's going to go down. And you can see over the last few days how it has been going up quite nicely. We use, just to make it easy on this channel, we of course are going to use our main charts, not the derivative chart, to figure out what to do, which way to go, and when to pull a trade or stay in. I have found that since the bigger charts are actually the original price movement, trying to use a derivative chart is not the smartest way to necessarily do things. But you practice any way you want. See how you make this work. You need to understand these inverse funds do have higher fees. They're recalibrated much more often. So if it goes up 2% on one day and then down 2% the following day, it's going to go lower than it started. How is that? Because it's going down 2% from the new higher price. So keep all that in mind. If you practice trade it, you'll learn it. We're all about practicing. We're not a stock calling service. We're an education firm. So things are continuing to move down. That is fine. We're waiting now for things to reset in order to jump back into another trade. 2 days continuing to move down strongly. And of course, the weekly, not the biggest down candle that we have seen in quite a while. The bigger one we would see would be back on the 13th of June. And again, we're not to that low yet, but we seem to be headed toward it. So that's where we are on the S&P 500. Very similar when you look at the Nasdaq 100. We, of course, have pulled that trade. We did that yesterday on Thursday in the morning. We tapped out when we hit our 4.59% profit in just a few days, actually starting on the 14th and then all the way through the 22nd, moving through one weekend. So it was quite beautiful. Glad to see that happen. Things are continuing to move down. Like I said, down 1.63% for the day. We look at the 2-day. Nice big down candle continuing to push down. Weekly, course, we had things rotate over and a nice big down candle heading that way. See it penetrating. As far as the wick goes, the 200 EMA body of the candle has not done that yet. We saw where things bounced off last time. We saw the same thing if I switch back over to the S&P 500. Again, where things moved down toward the 200 EMA and then bounced up. We're getting toward it again, but of course we don't see a wick pushing through it. But that is where we are on stocks. Now let's go to bonds. Bonds were the only thing up for the day, and it's hard to see at all on this chart on the weekly. Let's go to the half day, stretch this out a little bit and bring it up for you to see. You can see where we did end our bond trade. That was a rather long one. Don't like for them to typically go that long, but it did work. 2.59%, quite nice. And we look at where bonds are now. We can see where things were down in the morning, up some in the afternoon. Nonetheless, the STC is still heading down. We look at where things are on the 2-day. And of course, still moving down. Now we are well below the 200 EMA on bonds. Bonds have had a long chart down. We look at the weekly chart, and even there, we're well below the 200 EMA. Nice down. You can just see where bonds are sort of accelerating in that down movement. Remember, historically, bonds have been a safe haven when the stock market's not doing well, and you would expect, of course, bonds to be going up. If you look at the old beliefs, while the stock market, is going down, unless, of course, you have a great deleveraging underway where people are having to sell all sorts of things to cover margin calls and other positions. So bonds continuing to move down, up a little bit on Friday, 0.41%, but a lot of downward momentum and downward push. Now, we talk about how long this trade was in bonds. We switch over to gold. We had a day and a half to garner 1.58% in that last crossover going down. It was very good to us very quickly. We appreciate that. Now, bonds went green on the STC. We saw a day and a half of up movement, but then, of course, have moved back down. We're not going red yet, and we're not going to initiate a trade if it goes red immediately, because we want to see this center area of the STC chart penetrated. We need to see things move up and through it before they cross over going down again. We consider that important. You can see that prior trade at 1.58%, and then things moved up and down. We didn't initiate a trade in there, and then all the way up when they did and cleared that. That's when we jumped into that down trade. What about 2-day chart? The 2-day chart is again hammering down in gold. The weekly chart, likewise continuing to hammer down. Now it bounced off back in June on the week beginning the 11th and the 18th, of July. It bounced off the 200 EMA and up, but you can see it penetrated it on the candle last week and really pushed through it this week. So again, lots of weakness there in gold as it continues to just hammer down. Down for the day, 1.73%. Very interesting, a commodity like gold to go down that much and to just keep pushing through. We're into bear territory on gold now with that big push through the 200 EMA on the weekly chart. What's Bitcoin up to? Well, it was our biggest downer for the day, down 3%. Where is it? At 1828. We've talked about this bottom where Bitcoin has moved down to about the 1820 mark. As we get into the bigger charts, you'll see that show itself more. But again, lots of downward pressure on Bitcoin. Where are we on the 2-day? I mean, again, we can see where things have moved down to a low on that 2-day chart of 1803 and a prior low of 1817. So again, pushing down hard. We look at where things are. Again, like I said, it ended up the day at 1828. Now, this is the Bitcoin Future ETF. This is XBTF. One reason I like it is it trades like a stock or just a regular ETF. You don't have to go to any crypto exchange that may or may not be having problems or will have problems in the future. You can actually go right there to the markets, trade it like a stock, regular ETF. It is a short-term future ETF, so there, again, it's the kind of thing you read about, you can study. We're not giving advice on how to trade Bitcoin. We're asking you to practice trade with us. Learn the ins and outs before you ever consider putting a penny in. But you can see where we are pressing lower lows here now, hoping everything's going to bottom out around the 1820 mark. It may or may not do that. We'll continue to keep an eye, but downward pressure continues on Bitcoin. What happens in Bitcoin affects the rest of the crypto market. Bitcoin is the tide. As I keep saying over and over, I want you to have that analogy in your head. When Bitcoin leaves the harbor, all the boats sink. And when I say boats, I'm talking about the other ETFs related to cryptocurrencies and the other cryptocurrencies so much of the time. That is just sort of the fuel that keeps that entire market going. Now, when Bitcoin does flood in, then you can see a lot of good things happen. That's not happening right now. Now, I said for those of you who stayed with me that we would touch on commodities. And for those who are Patreon members, and then I do share on Fridays the charting crypto information for you guys. One thing that I've seen over the last couple of weeks is not really anything for me to add to cryptocurrencies, and I was trying to think, how can I make this more helpful to people? If you're going to bother to watch the Charting Crypto podcast, how can I make that better for you? I thought, why don't we, since there's not a lot happening in crypto, why don't we add some commodity exposure in there too and talk about what's happening there, because at some point Bitcoin's going to turn around. We'll have a lot to talk about then. But in the meantime, let's see where commodities are. We could make it sort of charting crypto and commodities, because I do think that at some point we're going to have some opportunities in commodities, and you got lots of commodity ETFs, ETNs, other things that trade on the market similar to stocks and regular ETFs. But if we look at something like one of three of Jim Rogers' various funds, this one is the Energy Total Return Fund. It was one of the big downers for the day in commodities, actually down 5.07% for the day. You can see where it topped out back in early June, and then down for several weeks, sideways for several weeks, and over the last 3 weeks, really plumbing down. Look at what's happening with the market sell-off with the price of oil. One thing I wanted you to think about, you're going to see all these commodities down. Why are they down? Aren't people still having to use oil? Aren't they still eating? Aren't they still using metals? Yes, they are, but when you have money flood out of the market, the extra money, extra income that people had to buy things isn't necessarily there. Entire countries not being able to buy the food they need to sustain themselves. And supply and demand, you may have a lot of demand, but if you don't have any money, the supply stacks up and the price goes down. And I find that sort of scary. Look at oil as it continues to move down. Let's take a look at gasoline. This is the U.S. Gasoline Fund. You can see where gas peaked. And another thing I want you to keep in mind here is having this information on your chart is fascinating. When you hear people talking about, oh, gas, well, you know when it peaked. You can see it on the chart. You know what it's been doing. Nothing but red down candles for weeks. When gas bottoms out and starts to move up again, you'll be the first to see it and to know it. Why? Because you can read a chart. You could see when it started going up back in December, mid-December. You can see when it crossed over on the STC from red to green, and really started taking off in mid-January. Moved up, then slid sideways for a while, and then in April, mid-April, it jacked up again to its high in early June, and then since then it's been going down for the day 4.57% for today. Amazing. What about UNG? That's natural gas. Just recently, 4 weeks ago, hit its most recent high. And since then, and you can see on Friday, down 4.29%, a really big down week. Again, not penetrate. You can see where it tried to penetrate the 200 EMA and then bounced off of it. Again, these are weekly charts. What about silver? Down 4% for the day. It is, of course, below its 200 EMA, so it is in a downtrend. Interesting, something you should pay attention to. What about, again, another Rogers fund, RJI? This is the total return in structured products. This is a total commodity fund. You can see where it peaked, and then, of course, how it has been going down, went down for weeks sideways, and then over the last 4 weeks, really moving down. Here's a Rogers total metal return fund. You can see where it over the last few weeks and over the last, 4 weeks ago, pushed through the 200 EMA on the weekly chart and is headed down. What about copper that can reflect a whole lot that is going on in manufacturing? It is down in negative territory, tried to move up to the 200 EMA and could not clear it. Down on Friday itself, 3.36%. Then what about feeding the world? What about food? Well, we can see that the wheat fund is trying to move up. It was down big on Friday, 3.08%. And we've got a green spinning top, which means some indecision in that continued up movement. And the STC is still red, but we will keep an eye on it because it did move down to the 200 EMA and tried to move up, but some weakness over the course this week, probably because of all the weakness in the market. But keep an eye on that. What about sugar? Look at sugar, just hammering down, sliding sideways, and then rolling back over. Is it going to go into negative territory over the next few weeks? Who knows? What about the Rogers Agricultural Fund? You can see where it hammered down for quite a while, gained some traction, and then sliding sideways and down over this week, sideways over the last few weeks. What about soybeans? So many animals live on soybeans and humans too, but look at where soybeans are tracking up. They're, again, doing okay right now. They were down for the day, 1.86%. We had 4 weeks of down movement there in June and July, mid-July, and then it started tracking up in August, sideways in September. So again, we already covered gold for you with all of that downward pushing gold. What about coffee? I love coffee. Where's coffee right now? Well, coffee had hit highs back in February and then tracking down and up and around, hit a most recent high in August, not as high as February, but getting up there, and then rolling over, down for the day 1.58%. So, but it is in positive territory, so we'll keep an eye on that, see where that goes. What about corn? Again, corn hit its highs back in April, then down for several weeks, but has slowly been trying to track up, having some stalling over the course of this week. Let's see where it goes over the next few weeks. So there's a lot of knowledge to gain from paying attention to these commodities. And if you educate yourself on how to follow trends, you can get a good feel for what's going on across the world, whether it's in metals, whether it's in food, whether it is in things like copper, gasoline, natural gas, oil. You can get a feel for where the world economy is going, and you can put that information into your decision-making process. So I am going to start adding commodities in to our charting crypto every week so that we have a little bit more to talk about, and we can also watch as many of those different ETFs, ETNs, either recover or don't, or present opportunities to us. That is where we are, folks. I so appreciate you being with us for the weekly review and forecast. We have had a lot of success lately in these trades, and the reason is because we're moving out of the summertime trading zone into the fall-winter trading zone. Those of you who stuck with us through thick and thin over the summer, your reward is now upon you. and we will continue to track these charts. I want you to use the information you garner here each and every day on your favorite stocks and ETFs, backtrack those, make sure they are chartable, and then follow our lead. Learn by doing. Doesn't cost you anything on these practice trades, but the time you devote. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.